Quick check on the price of gold. Let's bring up the chart, shall we? Show viewers how the spot price is doing. 15.01.15. Our next guest says any resolution for Greece will be funded with newly created money, which would debase the euro while increasing the appeal for precious metals like gold and silver. So, question is, should you be placing your money in or on gold miners? And if so, which one? Jay Taylor is president and CEO, Taylor Hard Money Advisors. He joins us live out of New York. So, Jay, instead of the nice, bright, polished, shiny stuff, you're saying go all the way upstream to the source to miners. Is that right?
I'm sorry, I didn't quite get your question.
I was saying rather than the processed finished product, go all the way upstream back to the gold miners. Is that where there's better value, better opportunity?
Well, I think it depends. I think you have to look at miners that, not necessarily the large household name companies. The big mining companies, I think, are no bargain, really. The markets have not treated them very well. And I think the reason for that is the large guys have a hard time replacing the gold they're producing every year. You know, the big guys like Newmont, Barrick, those kinds of companies are producing 3, 4, 5 million ounces a year. And it's not that easy to go out and find 3, 4, 5 million ounces a year. So basically they're having to go out and pay huge amounts of money, a lot of money for the junior mining companies, the little guys that are able to find the gold. They're paying a lot of money for that. So that's where I think the best chances of making a lot of money in the junior sector are. So I wouldn't say just in general mining stocks, but the sector that I like to watch are the new producers, the guys that are coming on stream or have recently come on stream that have lots of upside exploration potential. So they can grow organically and not have to go out and raise capital and dilute their shareholders base. And there's a number of companies that are in that category that I really like a lot. And there are a lot of other companies, exploration companies, that are moving up the food chain as well.
And how many of these names have proven reserves, Jay?
Well, a lot of them have proven reserves, and in the Canadian markets, which is what I follow, there's the National Instruments 43-101 criteria that really pretty well regulates the kind of reporting that's going on. So, you know, the companies that are in production would have some reserves, but what I like to look at are the resources, and those resources, the gold in the ground or the silver in the ground, what have you, that with just a few more drill holes will turn them into reserves, and then those can become produced gold ounces in the future.
We just showed some of the names as some of your key picks on a chart there, Jay, but I noticed some of them come from very different areas, like the likes of Mexico, also Nevada. What's the rationale behind where they're domiciled or where they're headquartered? Is this relevant for investors?
I think it is. I think that you want to have a diverse portfolio because of political risks. I think there are certain places I might not want to invest in. But Mexico, you just mentioned, there's a company called Timmins Gold that's there. A small producer, produced only 65,000 ounces last year, but they'll be doubling that production by the end of this year. They'll be producing at that rate. They're selling at about half of what their peers are selling for. And the interesting thing about Timmins is they're actually going to produce some dividends in the form of gold bullion. Mexico, I like Mexico. I like Canada a lot for its political risk, but also because it has the infrastructure, the regulatory infrastructure, as well as the old mining camps. And one company that I'm really fond of is Sandgold in Manitoba. And the reason I like Sandgold so much is because they have probably one of the most unique, high-grade, very large-scale discoveries in recent times in Canada. And they just recently brought on a CEO named George Peary, who was a senior executive and operator at Placer Dome. And since George has joined the company, it is really overperforming and underpromising. It's really delivering its production on level. It's producing very well, very efficiently. But what's really exciting about this company is its massive discovery. It's going to be drilling 300,000 meters this year. 300,000 meters, spending $25 million. And George Peary is telling me that they will be growing their reserves and their resources exponentially this year.
We must go. Thanks so much, Jay Taylor.